who gets in trouble if something goes south? They're going to look at you and say, did you do the things to verify that these investors qualify?
Yes.
Exactly.
Welcome back to video 3 in this Masterclass series, all about raising capital. We've got Veena Jetti here. We've got Nick, the attorney. And this is really cool. If you guys missed any of the previous videos, be sure to go back and watch those in order, because we're moving right along here on really how to go big with your real estate business, how to raise capital so that you can do more deals and do bigger deals.
Yes.
And like we've been saying, this is absolutely critical to your success. I would say, don't even start. Go back to whatever you were doing before. Don't even go down the road of real estate unless raising money becomes a really big part of your journey.
Yeah. This is a skill set.
Yeah.
And it is the most crucial piece of it. You cannot get to $1 billion bootstrapping. You just can't.
No, you
It's
can't.
not possible.
Yeah, or self-funding.
Yeah, I mean,
You
maybe
can't
it's possible,
self-fund.
but it's not possible in one lifetime.
Yeah. If you're self-funding deals,
Yeah.
man, you're on the slow path
No.
to this game. It's not about that.
Yeah.
And so in this video, we have Nick here again, and we're going to be talking about your different types of investors, right? Versus and accredited. We talked a little bit about that in the previous video. Non-accredited versus sophisticated. Are those 3 different types of investors,
Yes.
the main 3 or the
Yes.
only 3?
Not
they
the only
the only
3, but they're
Okay.
going to be the main 3.
Okay. So
Okay.
Nick, why don't you take it away here and help us understand, why does this matter? Why do we classify an investor as a certain type of investor?
Yeah.
And why is it some funds can do certain things with those types of investors, some funds can't? Why does that matter so much?
Yeah, so the reason that we're concerned with this is that that's going to help us understand which exemptions might work for us. And so we learned in the previous video, if we're selling security, we either must register or have an exemption. And so understanding what our investors are looking like, that's going to help us know which exemptions might work for us.
Okay, so it's all about those exemptions, because we do not want to have to register a security for the most part with what we're doing.
Exactly.
Yes.
Okay.
Okay, so what's an accredited investor?
Let's start with accredited.
So yeah, there's many ways to be an accredited investor, but the common ways that individuals and your retail investors would become that is primarily through their income or their net worth. And so if we're looking at income, we're saying you've made $200,000 or more for the past 2 years and expect to make that much or more this year. That's for an individual. If we're talking about spouses or spousal equivalents, then we up that number to $300,000.
Do they base it off of like how you file your tax return, like married filing jointly? Would that how they look at that?
Correct.
Okay.
Yeah. So if you're filing jointly, then you'd be the spousal or spousal equivalent, in which case you'd have to have that $300,000 track record.
Okay. But why? I mean, why do they need to be accredited and have that type of income level or net worth level?
Yeah. So part of it is that, if you're making that kind of income and overall, if you're accredited, typically you're going to be able to bear the storm a bit better. If the investment goes bad and you're making $300,000, yeah, you're going to feel it, but you're probably not going to be out of your house, hopefully.
Yeah. It's not their last $10,000
Right.
that they
Exactly.
invested is the idea, right?
Yes.
Exactly.
So you treat them a little differently. Basically, it's a big boy and big girl. They should know what they're doing.
Exactly.
A little bit.
Or they should have
Exactly.
the resources to have,
Weather it.
Yeah, to have, financial stability, but also like when you're making $300,000 a year, you probably can access like financial advisors and tax strategists or other professionals that maybe are in the industry to get some better business advice.
Or hopefully it's not your first time investing in something, right?
too.
You got maybe a little
Exactly.
experience.
That too. And so, but income is just one of the main ways that people meet the standard. The other one is
through your net worth. And so if you have a net worth of $1 million or more, but we exclude your primary residence. So a lot of people's biggest investment and biggest part of their net worth is where they live. And so with accredited investors, we take that out. So we take out where you live, take out your primary residence. And if you still have a net worth of $1 million or more, then you'd be accredited as
Which
well.
I'm surprised they haven't adjusted that for because $1 million now is $2
Not
million is
that
what the old
much.
million
Yeah.
was. You know what I mean?
Yeah.
But that's
and
great, I guess.
They're
isn't it?
talking about it, so it could adjust
Okay.
at some point.
They've talked about it, but similarly with the income, I think it's been since the 90s, I want to say that they
80s, yeah. I think I read
for the
200,000.
200,000. So think of 200,000 in the 80s versus now. Very drastically different.
Massively different.
So an accredited investor is actually not that special anymore.
Not
It's
anymore.
almost like you're a white collar worker.
Yeah,
right,
right
basically. Or
Yeah.
you have like a little bit of crypto money from back in the heydays. Who knows?
So in the 80s, it was a big deal. Not so much today.
Not so
because
much
of,
anymore.
That type of money isn't
which
as...
is great for someone starting now.
Yeah.
because now there's more opportunity than there's ever been.
Significantly more accredited
Yes,
investors now.
significant. And the $1 million excluding the primary home is actually the hardest, I think, for California homeowners, right? Because like so many times, if you own a house in California, you have like $500,000 in equity right there. But we have to exclude that when we're looking at the net worth.
Correct.
So you have income and net worth are the two primary to figure out if you're accredited.
We'll talk about another one though, because this might help some of the people out there.
Yes.
This is a newer one, but if you are a knowledgeable party of the issuer, so say Veena's selling a deal, she's going to be the issuer. And so when we say knowledgeable party, we're talking about typically like a C-level employee. So somebody who's in there making decisions and in the room, they're knowing the ins and outs. And so that person also can be accredited for that investment as well.
So that would be someone that works for you.
Yes.
Correct.
So like my CFO would be a knowledge party for
Even if
our
he doesn't
deals.
meet the other two boxes.
Correct.
Okay.
And then the other one too, the newer one, is there are certain exams and licenses you can hold.
To be determined. So there has been I believe it was the House bill passed to make a test to be accredited, but it hasn't passed Senate.
No,
yet,
I'm talking about like the Series 65.
Oh,
those
broker-dealer license,
Yeah, so now if you have certain licenses, even if you're not accredited by any of the other traditional definitions, and this is really new, this is in the last couple of years that this is
last year, probably.
1 year.
Yeah.
Okay. So now if you have like a Series 65, 67, 66,
yeah, it's
63,
various FINRA license.
could qualify.
FINRA is
Yes.
the registry. They regulate agents and brokers in the securities world. And so if you have one of those licenses, then you can be accredited as well.
So there's a few smaller things, but for the
Yes.
most part, it's the net worth $1 million, not counting your
Yeah.
house, or 200
Yes.
separately, 300 if you're married.
Married, yes.
Okay.
I would say like 99% of my investors
Are gonna be
meet
that.
those two definitions,
Yeah.
one of the two definitions. So I'd say most people, that's really the qualifier you're looking for when you're meeting new people or you're trying to qualify your investors.
And remember, when we're looking at those funds, we talked about it in the previous video, the 506B or C,
Yes.
it defines in there what those investors can and can't
Correct.
do, or
Exactly.
minimum requirements and things like that.
Correct.
Yeah,
Correct.
and if you remember with the 506C, that one allows general solicitation, but you have to have accredited investors.
Yeah. Remember that, guys. The previous video, it was 506C. They have to be accredited investors.
All of them.
All of them, but you don't have to have a substantial relationship.
Correct.
Exactly.
Correct.
Okay. So it's starting to, hopefully you're starting to kind of put all these pieces of
Pieces
the puzzle
together.
together, right? So, okay. So what's then a non-accredited? The opposite of that?
Yes.
Let's even go a step before that. We'll
Okay.
go to sophisticated. So
Which I've never heard of that. I thought there was non-accredited and non-accredited.
So a sophisticated investor is a non-accredited investor, but they're
they're
not
special.
just a non-accredited
Special
investor.
non-accredited.
Special
Yeah.
investors.
So with those investors, they're not accredited, but we're saying a way to think of it is they're financially savvy. So we're trying to figure out, do they possess the resources to understand the risks and the merits of this deal? So do they have maybe a financial education background, or what have they invested in the past? It's different from your typical stocks and bonds. Do they have a financial advisor that's maybe advising them?
Mm-hmm.
So we're trying to see, do you possess the skills, resources, knowledge to determine, does this make sense for me or not?
Man, that doesnn't seem very definitive. Like
It's not.
It isn't. It's clear as mud.
yeah. So
Yeah.
how do you stay out of the gray area and feel confident about that?
So some of the things you're going to want to do is that if you are taking their investment money and they're qualifying for the investment through their sophistication, you're going to want to understand, why are they sophisticated? So when we talked about 506B as in boy and having that pre-existing relationship, when you're building that pre-existing relationship, part of what you want to be doing is figuring out, what have your past investments been? Tell me about, your financial risks that you're able to tolerate. What types of investments are you interested in? Do you have a financial planner? So you're learning that type of stuff and figuring out, if I gave them a deal, are they going to be able to piece this together for themselves?
So would it be smart to have maybe like a checklist and you fill that out and it goes in a file and you kind of can show you did your due diligence?
Yes.
Is that what you should do?
Oddly enough, that's one of the things that I always include and make investors do with that, is that we literally call it the investor checklist, and it goes through, tell me your education, tell me your past investments, tell me your financial planner, and all of that as part of that record keeping.
Because who gets in trouble if something goes south? They're going to look at you and say, did you do the things to verify that these
Yes.
investors qualify?
Yes.
Exactly.
Hey, Nick, do you think we can get a template of that for Jerry's subscribers?
You're paying, of course.
Yeah.
Yes, of
Done.
course we can throw
Done.
one in there.
Yes. Okay. Amazing. So we can add that so that
So
people
guys,
have
would you
that.
like that checklist? Would that be valuable?
I think.
Thank you.
I
That would be
think they could
amazing. We'll
use
add that
it.
to the kit. that
Amazing.
we're-
Yes, we'll add it to the kit.
So remember, guys, there's a link in the description that's got a bunch of resources
Yes.
that Veena's going to be giving you for free,
Yes.
so that you can start to have these things for you.
Yes.
Right?
So that'll be one of them.
Okay. So the
For sure.
checklist of what defines a non-accredited or no, non-sophisticated.
We're trying to
define
qualify
sophisticated,
if
sorry.
they're
Yeah.
sophisticated.
Okay. And sophisticated puts them in the accredited box? Or,
No.
Okay.
It's so accredited is only really the major definitions we talked about already. This is the unaccredited box, but there's a sliver of sophisticated investors. So in a 506B, right, for clarity, you can have up to 35 unaccredited but sophisticated investors.
That you can have,
So
yeah.
that means that you can't have just unaccredited investors that have no sophistication. Like I can't go and ask the McDonald's worker who's making $17 an hour and is like a single person, not married to a high income earner or anything like that,
Yeah.
and has no financial background, no college education, no financial advisor. I can't go to them and be like, oh, I have this deal. I can take 35 people in that same avatar. That won't work because they don't have the sophistication. But now, me, for example, when I graduated from college, I graduated with my degree in finance. I worked in private equity shops. So someone could have come to me before I met the income or net worth requirements and said, hey, are you sophisticated? And likely I could qualify under that sophisticated definition.
Okay. Yeah.
So that's kind of the difference between the two. So we don't want unaccredited investors in our deals, right? Because we don't want anyone's last
$10,000.
$10,000, right? But two, we want people who can really withstand any kind of market turbulence or volatility. These are alternative assets. And until they get to that level of sophistication or that level of accreditation, they really have other things that they should be focusing on just from like a personal financial health
Yeah.
perspective.
They can't be living off of their preferred rate that
Correct.
you're, giving them.
Correct. And definitely not initially.
Yeah.
So that's why you really want to make sure that you are, and I think that's just an ethical obligation, right? Like SEC rules aside, ethically, none of us want anybody's last $10,000. Like, go put it somewhere else. Like, money market's doing great right now. Go do that instead, right? But this is a tool and a part of a healthy portfolio includes alternative investments. And if you look to the wealthiest people in the country, they have the majority of their portfolio in alternative investments. Most of us don't invest into the stock market. Like we might have some holdings, but it does not represent a
And what
majority
do you mean by
of it.
alternative investments?
Like anything that is not available on like a publicly traded market,
Okay.
private investments, private placements.
So that's your apartments and all the other types
Yeah,
of things.
like anything that falls into our purview of where you would take like private money or investors or passive investors, that I would say is like an alternative investment. Now there's other like non-traditional stuff, right? Like you could have like crypto became a big thing
gold and
recently.
silver.
NFTs, like those are all alternative. Anything that's not your traditional stocks and bonds is what I would say are your
perfect.
alternative investment classes.
Okay, so that's that one. What and then non-accredited would be
And then, your plain unaccredited means that they are not accredited, so not 200,000 or not $1 million net worth. They're not sophisticated. They don't have alternative investments, don't have a financial background, and they're just, don't meet any of those educational or financial metrics.
Your average American is really,
Yeah,
unfortunately, that's the
99% of the
definition.
population.
Yeah.
But there are funds that will allow those investors to be in the fund.
Yeah, so when we were talking about Regulation A and Regulation CF, those were the ones that take a bit longer, and you got to host on platforms and things like that. With those ones, both of those allow you to advertise, so you can do general solicitation, no pre-existing relationships required, and you can take capital from anybody at all.
So that would be like Kickstarter or
Yes.
some of these crowdfunding.
So the difference between Kickstarter and what we're talking about is Kickstarter is often referred to as a prize crowdfund. So you're getting a gift or maybe a pre-order of the widget,
The thing, the
or a
pair of
discount.
shoes or whatever.
But other things where you can take $1,000, like those funds.
Exactly. Yeah, there are you'll see a lot more now, just websites where it's like invest as little as $500.
Yeah.
Those ones,
CrowdStreet, those types.
yes. Those ones, so unaccredited investors can also participate in those. They're just going to be capped as to how much they can invest. And so typically, I believe the number is 124,000. If they're unaccredited and they make above 124, they can invest up to 10% of their income in 12 months.
Oh, so they even define unaccredited with some vehicles. Okay. Yeah, interesting.
And then if they're below that 124 range, then they can invest up to 5% of their annual income.
But you don't see too many real estate funds doing that, right? Where just like for unaccredited investors, typically we stay away from unaccredited for real estate, or not necessarily.
I think in the world of what you and I are trying to accomplish, we do, because again, we don't want anyone's last $10,000. Secondly, I think the administrative hurdle of having unaccredited investors is significantly higher.
So more regulation.
Not just the regulation, the hand-holding, the anxiety. So one thing I've learned in raising as much capital as I have is the larger the check, the less you hear from them.
Yeah.
Because the people, like I have an investor, right? He is a very successful doctor, and he's probably written a few $1 million over the years into various projects, but I have a deal that he had $1 million into. And I was like, hey, we sold the deal. We made them a boatload of money. Like we returned $1.88 million back to him in 18 months. Like,
wow. Yeah, because you flipped it, you turned it.
Yeah, we flipped it actually. If you want to, an 18-month flip. I'm a flipper now.
That's definitely a flip.
Unplanned.
Yeah, it was an unplanned flip, but we made like a stupid amount of money for our investors. And I'm like calling him and leaving him message after message after message. I'm like,
tell him,
hey, it's Veena. Yeah, can you please call me back? I really want to discuss this deal.
I need your wire instructions.
Yeah, right. That's actually exactly what it was. I was like, I need to wire you a whole bunch of money. Call me back. Call me back. Hey, it's Veena again. Hi, Veena. You know, I have almost $2 million of your money. I cannot get a hold of him. And I'm like, should I like page him at the hospital? Like, what do I do? Because
he's a doctor.
Yeah, he's a doctor. He's a surgeon. And he's not answering. And then finally I get a hold of him. He's like, oh yeah, I saw you had called. I know you did great. Good job. I'm like, okay, can you send me your wire instructions? I need to get this back to you. I need you to sign off on the release, etc. He's like, yeah, send it to me. I'll get it. And I'm like, okay, great. Cause then I can get this money back to you. It's ready to go. And you always want to be calling your investors when you are telling them like great news, right? And he's like, okay, cool. I'll send it over to you. Weeks go by.
Doesn't do
Crickets.
Because he's busy.
Because rich people just don't care. Like $2 million to him does not represent enough money for him to get out of bed in the morning.
Yeah.
And so I'm like, okay. So I'm like, I finally have to send him a text. I'm like threatening him that if he doesn't tell me how to pay him, this is going to be a big problem. So I'm like, hey, listen, doc, I really need to get this money out. I'm going to wind down the entity, and then it's going to be a problem because I don't know what to do with your money. Then finally that got him to give me his wire instructions to send him the $2 million. But up until that point, I'm sitting here like, I'm literally threatening an investor.
Versus the $25,000 investor who's, Veena, how's my deal going? Veena, how's my deal going? Veena, what's going on with my project?
Yes. So the $25,000 investor, every other day,
texting,
hey,
calling.
How's this going? Are things on, what does this number mean? And it's like the stark difference between those two, right? So when you have that investor, the $25,000 represents so much more of their portfolio than the $2 million investor does. And that's why I had said it earlier that we track our KPIs of what our check size is, because you actually become more efficient the larger your check is. And so for you and I and the people watching this, you really want to be gearing toward accredited investors, and if not accredited, definitely sophisticated. We don't really want to be going into unaccredited territory until we've mastered the Reg D, 506B, and or 506C. And then we get to the scale where Reg A or Reg CF is easy for us to bring in because we have the company infrastructure to handle it. Then it's a different ballgame, because then you're not the one answering to your investors all the time for everything. You maybe have a team that can help manage and mitigate some of that time suck.
So you're 65 million raised right now. Which one is that?
506C.
C.
Yeah.
Okay.
Yeah, because I just don't know that I have enough cash or capital available in my network to really do a 506B.
So you want to be able to broaden the search, broaden your funnel of
as I need
investment.
to. Right. So if I have to start advertising somewhere to reach more investors, or if I have to start sponsoring things to reach more investors, I can do that because I don't have to have the pre-existing substantiative relationship.
Yeah, that's fantastic.
The other thing with yours too, though, with that level of raise, keep in mind with 506B, you only have up to 35 unaccredited sophisticated investors. So even if they're given $100,000, that's 3.5 million out of 65.
Doesn't move the
and
needle.
you're taking away your ability to advertise and solicit
Yes.
for 3.5 max. Most
Not
likely.
worth
Good
it.
point. Yeah.
Yeah,
So we
because
talked about that.
a sophisticated but unaccredited investor isn't writing $1 million check.
No.
They don't have. If they had it, they would be accredited by the
Right.
very definition of it. So that's the other thing. It's a drop in the bucket.
Okay. Awesome. Well, that really helps.
Yes.
I mean, that was explained better than I had ever understood it. And I've heard accredited, non-accredited, all of that for so much.
Good.
So hopefully that gives you guys a really good understanding. Yes. We're going to wrap up this video, guys. Again, make sure you leave a comment and say, thank you, Veena, for the resources. Thank you for bringing your securities attorney, Nick. Nick, thank you for all your
Thank you,
expertise.
Nick.
Of course.
Isn't Nick amazing? He doesn't seem at all like a dry, boring attorney who reads thousands of pages of documents.
Thankfully, no. And also, he shows up when you snap your fingers. So you guys try this at home, snap your fingers and see if Nick appears.
Yeah, try it. Yeah, awesome.
And then report back.
And we'll put your information, guys, so that you can follow Veena. She's really blowing up the real estate community with her education and the things she's doing. And you've got some really amazing. Your Facebook group is just phenomenal. It's so fun. I've really been enjoying that, and Nick's contact info as well. And guys, again, we have a link for the playlist, so make sure that you're following along as these videos come out. I think our next video, well, we'll see what it is. We've got a whole list here of different videos, but we'll see you guys on the next video.